So ISP Finance is one of the companies in the microcredit space, along with Dollar Financial, Access Financial. I'm trying to see if there's any other. I can't think of any right now. Oh well, Lasco Financial, and I believe that's it, right? So they operate in that space, and they were listed from 2016, and so recently news that have come out about them acquiring a loan book of 1.2 billion. And we saw the impact that had on the stock price in the short term. But I checked out their AGM that took place 2 days ago, and they're talking about some other things coming out of that AGM. So I'm going to go through that today and talk about the microfinance space as a whole, right? Because I think it's quite interesting right now, especially for companies like Dollar and Access. And so I'm going to talk about ISP first, go through them, and then we'll see what other things may come up for the other ones as well. So let's just jump right into that. All right. So I'm going to assume, for example, that some persons might not have heard about ISP before. So I thought I'd start with their website. So they seem to do commercial and personal loans. And if you go to their website, ispfinanceservices.com, you'll be able to see the details, when they started, things of that nature. I'm not going to go through every single detail, of course, but you seem to be able to submit your details online and maybe possibly apply for a loan. I think if you go to personal loan, you see the option on how to apply. So I don't know if this brings you to a form to apply. Well, I guess it maybe just points you to someone who can talk to you within a day or two. I don't know, right? I've never tried it. So we're gonna look at their most recent financial, and which is their fourth quarter that was posted on the JSE, I think in February, and then talk about what came out of their AGM based on the portions that I saw, and what it may mean for them in terms of fundraise, etc. So we're gonna focus on the microcredit space for this video. So if you're interested in those companies, just stick around for that. All right. So this is for the fourth quarter. I'm just going to read the notes here. All right. So it says the board of directors is pleased to present the company's unaudited financials, and that seems very low. I think you can read that a little bit better now. I'm trying not to have to scroll. Okay. So the company's interest income declined from 139 million to 113 in the fourth quarter, representing a 25 million decrease, or 18.2% over the same period in 2023. The company's net operating income after interest expenses and commissions total 95 million versus 119. So they're essentially saying their Q4 for 2024 did not do as well as the previous year. Company's net profit also decreased by 30 million. Of course, all of this seems to maybe be projected to be better with the acquisition of the loan book, but we'll talk about that a little later. So the company continued to experience after effects of Hurricane Beryl in the fourth quarter, having a lingering negative impact on loan demand, impacting loan disbursements during the quarter. And that part I thought was interesting, because I would think it may be to their business segment, because I'm imagining the personal segment would want loans, maybe because of Beryl. I'm not sure, but Beryl was May, June, July last year. So it was interesting to see that there was still an impact in their Q4, which is October, November, December. So that was a little strange to see them noting Beryl so late in the year. But anyway, increased competition in the market has heightened the pressure on loan spreads and an increasing number of requests from customers for interest rate reductions. This, when I saw this, I thought this was interesting to see for them to state, because I'm not surprised if especially with interest rates being lowered. So many demand in terms of lenders, because I can tell you, I personally know probably 5, 6, 7, 8 persons who do personal loans that aren't in a formal business. And then I know a few businesses outside of the ones that are listed. So the space is very saturated, but it's also the same space that we've been expecting to see some consolidation for. Now, the fact that they didn't declare who the loan book was acquired from, the 1.2 billion one, makes me feel like it's not necessarily maybe a notable company, meaning a company that we've probably heard about. But it's interesting that they were the first ones to do it, right? Because we didn't see that from Access, didn't see that from Dollar, but we see that from them, and they've signaled intent to continue to grow through inorganic growth, right? But that point of customers asking for loan um, interest rate reductions is very telling, and it means then if they don't give in to what the customer is asking for, they may potentially lose those clients. And then it also means that now clients are doing more rate shopping, whether through just financial literacy or just an understanding that there are options that are probably um, providing the same turnaround time. Because really, when you're borrowing money, it comes down to interest rate, um, or convenience, right? I don't see it really being much else, um, especially if somebody's doing business with you for the first time. So, companies continue to exercise caution in discerning loan quality in an attempt to grow the loan book organically while looking for other opportunities for loan growth. Um, so I know their NPL was a little bit high. I believe they said 20% the previous year. And one of the questions at the AGM was, what are they going to do about that? How are they seeking to improve that? Earnings per share stood at 1 cent at the end of the fourth, compared to 25 cents at the end of the fourth in 2023, reflecting a decrease of 95.1%. That is not good. Absolutely not good at all, right? So they do have, when I think EPS, I always think about number of shares outstanding, just 100 million here in terms of shares outstanding. So that's actually not a lot. So it shows you the size of their business if their EPS is 1 cent, in terms of their profitability overall. Total assets 1.2 billion, which increased 12.8%, and operating expenses decreased to 98.5 million. Um, and well, let me read that. Okay. The company continues to manage its operating costs tightly given the pressure of lower interest rates and lower demand, while continuing to be prudent in its loan loss provisioning. The company would like to thank, we know that already, so let's go straight into their P&L. So this is for the 12 months ended December 31st, 2024. So a few things I look at when I look at Q4 results. I'm looking for the 12 months, how they did, and then I'm looking at the quarter. So we already see that the quarter is down, and you would have mentioned that before. And so net interest income is down here as well, 99 million as opposed to 125. Commission expenses, FX loss, and then their operating expenses, allowance for credit losses is 51 million, right? So out of income of 99 million, allowance for credit losses is 51, right? That's significant, right? Depreciation expense, other operating expenses, and so the profit is simply not there, right? That's 1 million in a quarter. That's terrible, right? No other way to say it really. So that's why the EPS is so low, right? I can't imagine a company making $1 million, a listed company making $1 million profit in a quarter, when their business is doing loans. That's interesting to me. That's very telling for them. It makes me see though their aggressive nature to grow inorganically, but it tells me something fundamental about the business itself. If this is what they're generating right now, right? They're not, either their marketing needs to be better, their sales strategy needs to be better, but that's not a recipe for a growing business. Because what I'm concerned with, even if they do the acquisition that they did for the $1.2 billion loan book, the thing about a loan business is that you have to find a way to consistently grow that business in terms of loan book and consistently grow the profitability of that business. So if you're not growing organically, if you adopt a loan book, you adopt those clients, at some point they're going to pay off their loans. If they don't have a reason to come back to you to continue that trend, your business will actually slowly decline, right? So you may see growth in the short term because of the acquisition, but at some point those loans are going to be repaid and your business may actually struggle if you don't have a system to grow. So that's my immediate concern here, based on just this quarter. Now they cited Hurricane Beryl in terms of the reason for the decline, and so I mean, we'll take that for what it is and see. But I would expect that things would have been improving as they go on, meaning as the economy recovers, it should be improving. As interest rates go down, to me, it should actually increase borrowing for microcredit companies, because it's ultimately easier to borrow from them, right? They don't have the same process as a bank, and the bar for them is slightly lower, so it's easier to acquire loans. So to me, it shouldn't be a decline, right? So I'm not sure that that's actually a good sign in my opinion, right? I may be wrong. So for the 12 months, they did 513 million, so slight growth over the 507 million. And net interest income, 452 million as opposed to 447, so about a $5 million growth there. Commission expenses, 17 million. Foreign exchange loss, but the allowance for credit losses, 171 million. That is massive right there. Staff costs, 89 million. That has actually decreased by about 14 million. Depreciation expense, 105 million. And profit before taxation ended up now decreasing because of that allowance for credit losses, right? So they have to find a way to manage that, because it's severely impacting their profitability, right? So their EPS didn't grow, overall profitability did not grow. So they have to find a way to manage that allowance for credit loss, because it's gonna significantly impact their profitability. All right. This is their balance sheet, and I thought I'd go here because I heard mention of debt during the AGM. So cash and cash equivalents increased, marketable securities remain the same, loans grew here to 1 billion, up from 984 million. Receivables were 37 million. And property, plant, and equipment was 22 million. But then, let me see something here. Oh, okay. As mixing up something here. I thought depreciation was 105. I was like, that's a high number. Depreciation was 6 million, and other operating expenses. So I'll check if that is broken out, because operating expenses are being 105 million. I'd want to see what those are. Liabilities, they have a secured bond here for 465 million. I'm going to find out when that is due to be repaid. I believe the question was asked. I think it's maybe due the end of 2025, but I'll confirm that. And accounts payable and other liabilities are 95 million. So short-term cash, I'm looking to see if short-term cash is enough to pay short-term liabilities. Other receivables, okay, maybe cover it somewhat. Share capital accumulated surplus is 441 million. That has grown here because they made a profit, and so the liabilities here have grown overall. So the bond 6 million up, accounts payable grew about 70 million, and so on. So they have a fair amount of debt there. So let me see if those are broken out. I won't go through the cash flow right now. Let me see if they do a breakdown of the operating expenses. Is this the PPE, loans and receivables? Okay. All right. Loans, net provision for credit losses, income. I'm looking to see if they've broken down the operating expenses. That's what I'm looking for. So corporate bond is maturing September. Okay, so this is what was asked. I think Matthew from Limitless was asking them about how they're going to repay this bond, because the bond here matures September 30th, 2025, which means they're going to likely be raising capital to repay that, because of course they don't have the funds to be able to do that right now. So they'll have to, so this is where the fundraise comes in. They're either going to be doing a rights issue or an APO. Management was asked their preference. It didn't sound like they've made a decision, but when they asked about preference, it was mentioned an APO for them. So this is an interest rate of 11.5%. They could also very well just do another bond. Sometimes companies do that where they simply just issue another bond or simply extend the bond. That's I don't know if that's an issue for them, but they do have that option. They also have the option, for example, if the junior market cap has increased, they can raise capital that way as well. I don't remember how much they raised for IPO, but that's an option for them. They are, I think, on the second 5 years of their tax allowance for being a junior market company. And did they show operating expenses? No, they didn't. We know that EPS declined. So they have 105 million shares outstanding, and the top two shareholders have 95 million. This is 98 million. Well, this is 100 million. So not many shares are outstanding in the public domain, right? So 105 million shares outstanding, and this looks like almost 102, 103 million in the top 10, right? So not a lot of units available now. It was recommended, I think Philip recommended that they do a stock split. A stock split does seem like something that may make sense for them based on the liquidity here, right? So I don't think it trades a lot of volume, right? 20,000 units, 9,000 units. So it doesn't trade a lot. So liquidity is low. So they're actually a good candidate, I think, for a stock split. Actually, it makes sense to increase the liquidity of shares, especially if these shareholders aren't selling, because I think Dennis Smith is management. I don't remember Brandon Smith's name, but these shareholders may not be selling at all, right? So that's quite interesting. A stock split actually does make a lot of sense for them, based on what Philip had suggested. And I think there's an article here that was written that I'll go through as well. Well, let me pause here and see if there are any questions in the chat before I continue. Shells, you didn't miss much, but just turn on notifications and you'll know when we go live. So I was just thinking about the dozens of microlending firms now. NCB having its own fund for that. Definitely, other banks will have dedicated funds to compete. So yes, and I did note the low interest rate that NCB is. I think $1 billion fund is there. We don't know what the requirements will be, but there is going to be pressure on the microfinance space the lower interest rates get, because as banks gradually make it easier to borrow, then there's less of an incentive to go to a microcredit place if it is that it's easier to borrow and the interest rates are significantly lower. So that is a risk for the microcredit space. But we'll see, because banks have been lending money forever. Banks have SME fund. I know Jane has a small business fund, JMMB, Sagicor, all of the banks have some small business sector, and yet these microfinance companies continue to grow. So not necessarily. Melly said, certainly, not sure what you were saying, certainly for, maybe something I said. And Shell said, I'm thinking the problem is not the availability of funds per se, but instead there just isn't enough qualified small firms out there. All 100 lenders are competing for the same 50 small firm. What are you talking about here, Shells? Which aspect of it? Because there are a lot of microcredit companies that are not a part of, that have not subjected themselves to the Microcredit Act. So it's not a small pool to choose from. Now, there may be a small amount doing $1 billion or more, but it's like there are literally a lot of payday lending companies. And as I said, I know a lot of informal ones as well. So the space is very, very active. So, okay. So clarify that for me, Shells, and I'll comment further. Microfinance companies tend to make it a little easier than actual banks. Yeah, so that's what I was saying. It's typically easier, and that's why persons go for it. When I had my first company, I took a microfinance loan every few months, right? And even back then, this was 2010, 11, 12. Interest rates were ridiculous. I was paying like, how much was it? I was paying like 20 something percent a month or something like that. I don't remember. I'd have to check. But the rate was calculated daily. Was it daily? It was calculated. I don't even remember, right? But the rates can get crazy. The rates can be somewhere between 15 upwards of 30%. I heard somebody recently who borrowed some money at 1% per day, right? So the microfinance space is it's brutal on borrowers, depending on the type of loan you're looking for, depending on who you go to, and depending on the market that you're serving, right? So you're saying too much lenders, small qualified businesses. Well, so here's the thing. It doesn't, in my experience, you don't need a lot to qualify actually. Now, a company like Dollar Financial seems to be a little bit more guided in terms of their requirements, which is why I think their NPLs are low, and so on. But from my experience, it doesn't take a lot to get funds from a microfinance space. It's especially on the personal side, proof of income, and you get that loan pretty much within a couple of days. If it's a business side, you may need a little bit more because you may need to show financials. I'm not sure how that goes. Let me check their website for the requirements for the business loans. Let me check that. So it says you need ID, TRN, proof of address, proof of income, bank statements, invoice receipts, and contracts and registration certificate. That's actually not a lot of requirements. Like it's more complicated to open a bank account than it is to get a loan here. Okay. I see what you're saying, Shells, in terms of talking about businesses. So The only thing I have a problem with, of course, is the guarantor part, because that's tricky. I don't. I've done that for persons. Persons have done it for me. I pretty much ruined that friendship when I was younger. Because the person stood guarantor for me, and at the time, I don't think I was able to manage that loan well. It was when I was really young, like 16 years ago, but still, just I remember their experience of being a guarantor for me, and yeah, not so keen on that part. The easier the access to the loan, the higher the interest rates. Exactly. That is how it works, actually. Very much so. You are correct there, sir. All right. So I'm gonna pause here a bit. Well, almost at the 30-minute mark. I'll pause then. But thinking about the proposed micro, finish that thought, shells, and I'll address it. But yeah, it's easier. The easier the ability to get the easier access to the loan, the higher the rate. Um, oh, okay. And listen, the more I think about that micro um, market, I'm 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 not a fan. I'm not a fan. We'll see. We saw here where ISP made $1 million in 1 quarter. What are we gonna see from micro companies, and how are you gonna price them? So I mean, I'll get there. Only accredited investors should be allowed. I agree, because it's gonna be extremely speculative. It's gonna be extremely difficult for these companies, and I mean, I would love to see, as David Rose said on Taking Stock yesterday, I would love to see better enforcement for junior market companies before you try and bring in more companies to list, because either the JSE has a compliance issue or a process issue or something that companies sometimes drop the ball in terms of their reporting requirements or their audited financials. And it seems to be that the space needs more support, right? The market has done a lot, has generated wealth for a lot of people, but there are lots of opportunities for the market to be better managed in that regard. Macro market leaves far too many unanswered questions. Personally, we should build out a more. That's what I'm saying, right? So I think I'd love to see um, more investors come to the market. I'd love to see more liquidity in a lot of the companies that are trading. I'd love to see more functions and features of the market itself. So, well, I should save this rant for another day, right? But the risk is I think the micro credit market is going to be too risky, right? And if junior market companies struggle with compliance, a micro market company will struggle even more, because audits are expensive, AGMs are expensive, the JC fees can catch up with them as well. There's a lot to go there, right? The regular real investors will not be able to take a loss. If you can't afford to lose 2 million, you should not be allowed to invest. It is way too risky. For sure, the risk is there, right? So before I continue, of course, I certainly want to invite everyone to join us for our conference that's coming up in 3 weeks, right? So we have an amazing event planned, and especially the pitch competition. I recommend that you apply for, which closes in a couple of days, right? So I think 3 days from now is when the pitch competition closes. So March 21st, 2 days from now. So you can pitch and have the chance to win cash prizes, mentorship, um, and some great opportunities coming out of it. I wanted to highlight my topic, right? So my topic, I'm going to be speaking about preparing your business for investment, or making your business a vehicle for investing. So those who are entrepreneurs, looking at how you can be preparing yourself for investment, what opportunities there are, and what type of business is actually investable, right? So that's something to look forward to. So this will actually, I think, be interesting for investors who, for example, want to maybe venture into private equity and know what type of businesses they should be investing in, right? So that's from the investment perspective, just something that I think would be interesting for you or community members. And of course, I think we have a great lineup all around, right? So learngrowinvestconference.com. It's under 3 weeks away. So I look forward to seeing everybody there. So let me get into this article now that was mentioned. So it says here that they're eyeing more acquisition following their $1.2 billion deal that they did recently. So, Sean, it's interesting you're talking about risk. I'll get to your comment later, right? So ISP remains on the hunt for acquisition and merger opportunities, even as it completes the integration of a $1.2 billion loan portfolio acquired earlier this year. So I'm interested to see what their Q1 looks like. The company, which has been aggressively expanding its presence in the microfinance sector, signals its intent to continue growing organically while also exploring capital raising initiatives to strengthen its financial position. There are new areas that they intend to expand their product offering, and I believe that will drive shareholder value. They continue to seek opportunities to grow its loan portfolio, either through acquisitions and or mergers. So I'll pause there a sec. I don't know if they should be too quick to do another acquisition, only because sure you do due diligence and that stuff, but the integration may take some time, right? You're integrating customers into your existing systems. You're essentially doubling, maybe tripling your administration. Maybe the follow-ups will take a certain, I mean, I don't know what backend systems they have, right? But it may take a while to fully integrate. So looking for another acquisition in 2025 may not be prudent for them, but we'll see. We'll see what they say, right? This would include buying existing loan portfolios from other financial institutions. That was mentioned at the AGM. So the company remains open for dialogue and has engaged the services of an investment bank. I wonder which investment bank that is. I have one in mind, but let's see. Right? ISP's newfound interest in acquisitions started roughly 4 years ago when the Microcredit Act was passed, with the primary aim of preventing the sector from being used for money laundering and terrorism financing. I'd love to see the impact of that, because we didn't even talk about that in the space. So the sector's regulation sparked industry-wide discussions about takeovers and partnerships, but as I said, we have not seen any. This is the first one we have seen in 4 years, which is actually very interesting to me. So it's either companies flying under the radar. I'm curious to see the compliance of the Microcredit Act, and we know the listed companies had no choice but to comply because they're visible, but those who aren't, I'm not so sure. All right, so with new regulatory oversight by the central bank, several payday lenders were forced to rethink their business models given the high cost of compliance, right? And surging loan losses due to pandemic-induced defaults. Yep, which is what I was expecting. So that led to the course of some closure of some micro lending companies, but concurrently the market conditions created opportunities for stronger players to expand. So while management has not disclosed details about the seller, the company CEO said that the deal aligns with their strategy to expand lending while maintaining prudent risk management. So much I want to say with that phrase there. Because of confidentiality agreements, they're restricted as to what they can say about the loan business. I don't like that, right? You are a publicly listed company. You should be able to tell me who you bought it from. At least at the AGM, that should have been said. And I would like to know certain things. As if I were a shareholder, which I'm not, I'd want to know how many clients, what's the state of the business, what due diligence took place, what's the maturity of some of those loans, what were the tenure, what's the makeup, was it more business or personal loans? There's so many questions that leads to, because as a shareholder, I would not know the quality of the loan book that you just brought in to my company as a shareholder, right? So the limited information here, because there might have been a confidentiality agreement, but you're a publicly listed company. But anyway, all right, so Amid plans to keep its feelers out for acquisition and merger opportunities. They're paying closer attention to how it manages debt. So they plan to refinance their bond maturing in September 2025 as a part of its broader strategy to ensure financial stability. So while details on how the loan acquisition was funded remain undisclosed, as I said, this is where they said it's either rights issue or APO, and they were asked if they have a preference, and they said APO is what they're likely to go with. But again, to me, it didn't sound like they have made a decision, so that may still be left up to maybe a later meeting, right? So it says here they have implemented stricter credit assessments to enhanced monitoring system to manage their NPL, which stood at 20% in 2023, right? So that is my concern with you acquiring more debt if your NPL is so high, right? So you have shown that you are not able to manage your non-performing loans and you're about to take on even more, right? That would be concerning for me there. We have been quite open in terms of describing the issues they've had. Okay, so said that already. As for the strategy, okay, yes. So this was said. Naturally, we would go for either of the two, but more likely an APO. Yes, that's what was said, and I think that's it. Okay. And as we mentioned before, the stock has traded as high as $49 in the last 12 months. It went up really high earlier this year and has been relatively, like, it was usually around the $20-$25. That announcement came very low volumes, by the way, right? Because as I said, the stock is highly illiquid, right? So if you're looking at this company, liquidity would be an extreme concern, which is why I think a stock split makes sense for them, because it's not very liquid. But the truth is, the company doesn't appear to be healthy, in my opinion, based on the NPLs being so high, their profitability being so low, and just their overall management of their debt. I don't know. Like, to me, they seem to be a candidate for acquisition. I think maybe somebody to maybe take over their operations may actually make sense to help them improve and shore up some of those issues that they're facing. But volume range, imagine in the last year, the max is 20,000 units. That's crazy, right? 20,000 units. So this would certainly not be a personal opinion, no, not a candidate for me, because of course, 20,000 units, like, even if you get, imagine if you got 50,000 units, 100,000 units, and you're trying to sell that, right? Somebody who bought here, well, not much, but I don't know, this seems to be a very, very tricky stock to get out of, right? But I did say I'll talk about the microcredit space, so I'll get to that in a second. Stock price is currently $19. It went as high as $49 earlier this year upon the announcement of the acquisition of the loan book, but it didn't last long, right? Within a week, it went up. Within a week, it went back down to where it was before. So it didn't do much in terms of performance, right? So we're talking about the microcredit spaces here. Exactly, right? So we'll talk about that one. But let me see some other questions here. So JSC is not handling data well enough for us to see the true potential of our junior market. And I'm assuming you're saying the main market. Too much is required for improvement on the current markets to be starting a whole new one. I agree. Venture capital accredited investors and big institutions, not retail investors. I agree there as well. Sean said the suicide rate in Jamaica would skyrocket. Okay. Acquisitions of this nature will bring an increase in fixed overhead and admin costs plus exactly, right? So that is what I'm thinking. Your admin costs are gonna go up. So I'm looking to see their operating expenses for Q1, right? Because they acquired it. Well, I'm not sure if it would integrate that quickly, but I'd be watching to see how that progresses. But as I said, I think their processes need to be improved. Their management of debt needs to be improved. Their management of credit needs to improve based on what we're seeing, right? So it actually doesn't seem to be a good candidate. Well, let me pause that for now. Yeah. So there's also where the JSE rules should hold listed companies to a high level when it comes to pertinent info on these deals. Well, it's not clear. I haven't looked at the rule book in a minute. I don't remember what you're required to disclose, but there should be some guidance there for sure. It's funny how the company is publicly listed but behaving like a private one. Last I checked, if I own one share, I ought to, well, there's that. They would have to be APO just to show it exactly, because it'd have to be an APO just to show the top 10 shareholders, basically close family and friends own the business. Exactly. I mean, if you do a rights issue, there's probably a very small pool of retail investors that probably own shares. I don't imagine I think there's 100 shareholder minimum requirement on the JSE. I think David Rose said something like that to me. So I'm assuming they have maybe 100. They probably have a few hundred shareholders, if that much, because the shares are very tightly held, right? So ISP is depressing. Let's discuss Jamaica being closed and oversubscribed as expected, and also you being on spot with the dividend price rate. I'm trying not to do a video about Jamaica. I'm trying alienate. I'm trying. But when the Jamaica basis of allotment is announced, I'll cover that for sure. But yeah. So what was the catalyst for SV stock price to suddenly jump upward? Arnold, that was the announcement of the acquisition. That's all that was. So if you look here, they announced the acquisition February 12th, right? So February 12th, the price was $24. It was announced following day. It went up on the 13th, went up on the 14th, went up on the 17th. So it's the catalyst was the announcement, but of course, as with most announcements, the impact is short-lived. It went down back pretty much 2 weeks, 13 days later. So it doesn't last long, right? But that was a catalyst. I'm assuming the catalyst for the downward price movement here is the mention of the word APO, which it still amazes me that shareholders are so triggered by that word, but I'll leave that for another time. I sell all stocks in a company recently. They had an AGM and no option for online. In 2025, they think all investors live in JA. That's actually an interesting point, right? I think all AGMs in 2025 should be hybrid. It should be mandatory. Actually, you make a good point, Shells, that not everybody is in Jamaica. And I have maybe half the number of persons in our investment challenge is actually in outside Jamaica. So Cayman, US, Canada, UK, So we have quite a number of persons in our investment challenge that are not in Jamaica. So they wouldn't be able to attend an AGM in person. So not only are some of the AGMs in person, but they're offline. There's no recording, there's no video, nothing. It's yeah. So on the point, shareholders rather exit than dig deeper for a rights issue to be announced. So I mean, it again though, if you're sticking around for a possible rights issue or stock split, you're purely speculating at this point because of the state of the company. They have a lot to improve on, in my opinion, just from what I've seen. So that would be a risky investment, I think, in terms of just waiting just for an announcement. You'd be driving you'd be investing specifically for sentiment. So I think you'd be assuming that there's an inherent risk in investing so speculatively. But again, I'll leave that maybe for another day, right? So what I was saying, and this is what I think here, right? So with ISP, I think they would actually make a good case. So I know there was a whole thing about dollar and access a few years ago where dollar it was slipped that dollar was looking to acquire access. I think dollar could look to acquire ISP, right? Because now the value of the company is 2 billion. They would certainly have to get a discount on that, I think. I mean, based on the market value of shares, I mean, deals can be worked out. But if they can acquire this company, but then dollar is concerned about their NPLs and that stuff, it may not make a good candidate for them. But I think the way that I'd look at it is for them to maybe possibly acquire the company, transform their processes, train the staff, and pretty much revamp. So just like you see Fontana acquire Monarch and they're going in, rebranding, restructuring, essentially ISP, if Dollar does an acquisition, for example, they could essentially rebrand and rename. So they acquire them, delist, and then simply just have another branch of Dollar wherever ISP exists. I don't know. Let me see their locations. Check their About Us page. I don't know if they have a physical location here. I don't see a location. So it says Phoenix Avenue. So they might have one location there. So no, I mean, of course, I hope if anybody from the company is watching this is not offended at the thought of them being a target for acquisition. I don't look at it as a bad thing. I look at it as an opportunity for the business to grow, right? So your existing shareholders, your top 10 shareholders, your family and friends get a lump sum of cash. With the acquisition, they maybe form a part of the management team or the board, and the dollar increases their footprint. It could be a target for access as well. Who knows? It could also be a target for a company that may be growing and looking to list. So just like we saw where Energy acquired Siboney, I mean, of course, they're not like they're in a state where they're not active, but based on the value of the company now, $2 billion. I mean, dollar raised how much the other day, right? So what the market value of shares is saying, if somebody had $2 billion, they could essentially buy this company outright. That's what the market value says. So the market value being 2 billion, but would you spend 2 billion to generate 100 million in profits? No, wait, it wasn't 100 million. Would you spend 2 billion to generate 56 million a year? I don't think so. That's why I'm saying that it doesn't. They'll have to get a significant discount, I think, on those prices. So this price would have to go down. They'll have to negotiate a lower price per share for that. I haven't looked at Access in a minute, but I thought Let me see what some of you guys are saying because we're gonna end soon. I think I said that already. So does ISP align with the direction of dollar? That's another question. I mean, for sure. So I was just saying that after the review, after listening to the AGM, after seeing what they're saying and how confident they sound, etc. I mean, I just think that they could benefit from a revamp in terms of strategy because the numbers show. So how you perform is a result of your strategy. Market conditions are there, true, but if in the same climate, other companies are growing, it's so if all the sector is suffering, that's different. But if companies in your industry are growing, it means that it's a reflection of your personal strategy or something relating to your client base or maybe relating to your margins. So it could be from an 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 operational standpoint. I'm just saying that we've seen companies in their same space thrive, right? So if they are not thriving, it's a signal of something needing to be improved, right? Well, Shells, I will say this: AGMs are expensive, right? Food is expensive. So put it this way: for a company to host an AGM at a modest hotel for 100 people, that could run them $4 or $5 million just for that AGM. So some companies aren't willing to spend that, so they normally keep the food, or they usually seek to accommodate less people. But the truth is, not many shareholders turn out. So the biggest AGM I've seen is like a separate. I think that's the biggest one I've been to where it was a full room, and I think they maybe had 100, maybe 200 people there. But most of the AGMs I go to, 30 people, 40 people, including the management team and staff. So most AGMs aren't well attended. All right. Um, Even at 50% discount, ISP is not ready. I mean, I'm just saying. So spin off Ultra, then acquire ISP for cents on the dollar. Hmm, I can't wait to talk about dollar and Ultra, by the way, because I have some thoughts on that one, but not for today. Not for today. I have some thoughts there for sure. And ISP needs to be $7 at most per share right now for anybody sensible to make a deal with them. No, but here's the thing: it doesn't matter what the public price is. You can work out a deal for for a price regardless of what it's trading as, right? So let me check what was their IPO price back in 2016. So I didn't know you could do this. This is actually cool. I'm not sharing my screen yet, but didn't know I could do that just now. So their IPO was $2 per share, right? So then I can imagine if they were to do this IPO right now, investors would frown upon that $2 price. But they did. Wow, they issued, imagine this, 48 million shares. So then that further tells me, right? And again, they have 105 million outstanding, about over 100 million in the top 10. So it's not a lot of shares out, right? So $2 per share. I mean, so from IPO 2016, that's what, 900%. So hey, they've given shareholders that at least, but imagine this basis of allotment, right? Let me search ISP finance basis of allotment. This should be interesting. So basis of allotment. So public pool got the first 20,000 units and were allocated 100%. All that tells me is that it didn't get much take up there, right? Balance greater than 20,000 units were allocated between 10% and 14%. right? 46 million yes shells. 46 million, no, not 46, because it was $2 per share. So about 100 million is what they raised. So they could actually leverage they could raise more capital on the market. They could raise more capital. So they can actually, it may actually be cheaper for them to do that. Yeah, it may actually be cheaper for them to do that. So yeah, right. So so many things connecting for me there, right? Shell said they didn't want to go public. What do you mean they didn't want to go public? So why did they? I don't understand. Companies, they had a choice, right? They chose to go public, and so yeah. So they could very well go back private if they want, right? I'm just checking my chat to see if anybody's asking me any questions here. All right. Yeah. So that's interesting to see. All right, guys, I'm gonna wrap up this stream in a couple of minutes. If you have any questions, let me know. Thoughts on R.A. Williams? I haven't looked on them, but let's just say IPO shareholders are probably a little concerned right now. I thought the company had an opportunity to be a little bit more present in terms of their communication with shareholders, but I mean, it's I leave that alone for now. So IPO was $2 and 52-week 52. But here's the thing though, that price going up so high is a function of supply and demand, right? So it's low liquidity stocks can trade higher because of that same issue, right? So it probably went up that high due to limited volume. But I mean, you're not going to see Trans Jamaica have that kind of dramatic increase because of the liquidity of it. It's very hard to move the amount of shares that would lead to such an increase in price for Trans Jamaica over the short term. Now, do I believe they've only been listed 5 years? In 5 years, maybe they could be at a $20 stock. Who knows? It depends on the dividend yield, because that's simply a dividend play for Trans Jamaica. But they are, see, you guys pull me in, right? I'm not going to talk about Trans Jamaica. I'll stop it there. But the low liquidity for ISP is what led to such a dramatic price increase. If there was more liquidity, it would not go up so high. It would certainly probably trigger circuit breaker just the same with the announcement. But yeah, it's yeah. You're talking about R.A. Williams. I mean, I haven't looked at them, but yeah, I'd have to spend some time to go through. But I just remember seeing something. So it's 72 cents down now. So it's down from IPO price. It's been as low as 61 cents. So it did rebound a little bit, but it went down as low as 60 cents, 100,000 units, and now back up to 72. So hey, 20% for those who bought at 60 cents in the short term. But for a company that has not been listed, I think, a year yet, that's not a good sign for them. Exactly. You guys are always pulling me in with Trans Jamaica, right? Low liquidity stocks are sensitive to noise in the market. Well, all stocks are sensitive to noise. But there's some things that I'll talk about later on in the year about what I see in terms of the market and stuff like that. Okay, 15% increase in profit, that's good, but yeah, I'll leave that for now. I don't want to introduce any new company. I wanted to break for the hour, but just wanted to again just remind persons to join, or well, to get your tickets to our Learn, Grow, Invest conference. It's less than 3 weeks away, April 11 and 12. If you have a small business, submit your pitches by March 21st. And when we're talking about investing, talking about entrepreneurship, and just helping you make sense of both spaces, I would also say if you're interested in looking for companies to invest in terms of private equity, it's a very good space to network with persons who are looking to raise capital. So it could be quite interesting because it could be a great opportunity for you, because persons have asked me, Jermaine, how do I get access to companies to invest in privately? Go to an entrepreneurship conference. So the tickets are here, $150 online. We have a special now, 20% off. So all of these are the before sale prices. So 20% off for the online would bring it down to $120. 20% off for the general pass would be $240. And the VIP 20% off would be $400. So these are the prices now. The 20% discount ends in about a week and a half. So you do have a chance to get your tickets at the discounted price. And it's a 2-day event. So what you're paying is for 2 days, one price for 2 days. And so it's something that I'd love to see you all there. And of course, stay tuned to our social media for more information on that. So, all right, everyone, look out for a video in a couple of days when we get the basis of allotment for Trans Jamaica. There are some other companies I want to talk about, but I'm trying to work out the time, right? But at the very least, I'm trying to do the 1 video per week. ISP, I think, was a little bit compelling for me to talk about now, because I've been looking at the microfinance space and also the finance space. It seems to be going under some pressure, right? So I'm very interested to see how Dollar Financial performs this year as well. Sean, I have tried, is what I'll say. So I would say speak to the CEO and tell him that you'd love to see him on our platform. So that's what I'd do. I'd message him, tag him or something, and tell him that you'd like to see a 1GS interview. But I'm ready once they're ready. Shells, even if I know, I can't say anything. No, they have not announced yet. All right, everyone, enjoy the rest of your day whenever you're watching this, and I will see you again real soon.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.